Hi everyone, this is Mark from Stocks and Cash. It's Sunday, January 28th, 2018, and I'm here with a weekend market update video. I'll also go over my holdings and show you some potential setups that I see for Monday. Let's take a look at the SPY. So the SPY had a really strong bullish candle on Friday. It opened kind of flat and then melted up for the rest of the day. Quite opposite from what I was expecting. I thought we'd have some more consolidation, maybe even a pullback before we moved higher, but you can't fight what the market is doing, and my perspective has changed to be more bullish again. With caution, of course. We might be in a euphoric stage of the market. It's just continuing to ride up. MACD is looking very strong bullishly. The Stokes and the RSI are very overbought, so I'd be cautious. But I mean, volume on Friday was very strong. Some of the top volumes over the last few months. So I really do think the market continues higher. Eventually to the 295.79 target, and then I think ultimately to 300. Round numbers kind of have a psychological impact, so I think we will get there eventually. Certainly not next week, but maybe by the end of February we'll probably float up to 295 and maybe 300. That's kind of my view of the market at the moment, unless there's some kind of black swan event that changes things. Taking a look at the Qs, the Qs had a similar day to the SPY. Again, you saw that we had these three kind of sideways moving days, and then boom, we kind of just broke out and continued on higher. So we're over the 170.22 breakout level that I drew on these fibs. So I see targets of 174 and 179 on the Qs, in the relatively short term, weeks or so. So taking a look at my holdings, not the greatest day on Friday considering the broad market moves. Dunkin', IWM, and American Express really didn't do a whole lot. Disney had a nice bullish candle, and then I also picked up John Deere and eBay at the end of the day based on breakout levels that I had described on Thursday's update. So let's take a look. So Disney, as I said, had a nice bullish day on Friday. It kind of followed the broader market. I do think we'll reach our target, or my target, of 113.16. That is a breakout level, but I also have a resistance level drawn overhead, which concerns me a little bit, especially with earnings not too far away. I could probably redraw this. This is an old drawing, and if I move it to this obvious pivot point, it kind of lines up with the target target 1, which is 116.12. So to be honest, now that I relook at this at a a larger time frame, I think I may hold on to Disney, assuming it breaks through this 113 level and hold it up to 116. It's a small position. I'm only holding a few shares. But I do think if we break through, close above 113.16, we could continue up to 116, which I think is a pretty strong resistance level. You can see the MACD is starting to turn up. Stochastics are turned up, as is RSI. So Disney looks pretty bullish right now. Taking a look at American Express, kind of a hammer candle, not too pretty. The stochastics are still strongly bullish. MACD is still trying to cross over. And the RSI is flat. So hopefully we'll get an update on American Express, test this breakout level, and break through sometime next week. But earnings already happened here, so I'm not worried about that. So I can hold on to my options for a few weeks and see how it plays out. Probably put my stop at the low, maybe at the 50 exponential moving average. Sorry, the 55, which sits at 97.66. So risking about a $2 risk for, let's see, we're at 99 for about a $9 gain. So pretty good risk to reward there. We'll see how that trade plays out. IWM did not participate. This is the small caps. Did not participate with the S&P and Dow. Kind of had a hammer type candle. Hoping this is just kind of setting up a flag where we could break out sometime next week. So MACD is still technically bullish, although it's starting to roll a little bit. The Stokes are resetting a bit, and the RSI does have some room to continue, you know, higher. So I'm not writing off IWM, but definitely keeping a close eye on it after, you know, it didn't follow through the rest of the market on Friday. Let's take a look at DE, John Deere. You can see it broke out today, or I should say Friday. It broke above the 170.68 level that I had drawn for you last week. So I bought a couple of calls here, and I think it has potential to get to 179.50. So about a $7 move here for about a $2 risk or so. If I put the stop at the low of Friday's candle. Deere's been very strong. It tends to ride the 8 EMA. It looks like it's going to continue to do that, so I'm pretty confident in this play. eBay had a nice strong day on Friday. I did end up getting in, and I do think we can reach our first target of 41.82. Not exactly sure when, but hopefully before earnings. And then to take a look at Duncan, my other holding, as I said, it didn't really, you know, participate in the market. It had a hammerish type candle today, which can be bearish sentiment if the pattern plays out. That being said, we had kind of declining volume, so I do think there's an opportunity for a little flag pattern to happen here and to pop up and get to our 70.82 target. So I'm not too worried about Duncan. American Express is probably the only one that I'm a little concerned about right now. So now let's take a look at some trade setups that I see. CSX Railroads had a very strong day on Friday. It closed above its 8 EMA. The stochastics turned up, RSI turned up, and MACD, although flat, looks like it's trying to turn up bullishly and cross over. The only thing I'm concerned about is that volume was a little low. So if you are going to get in, I would recommend a small position and be smart about your stop. You know, maybe put it below the 8 EMA. I'm not sure if I'll enter this trade, but if I did enter, it would be on the 5-minute rule. See if we can, you know, break above the high of the first 5-minute candle and continue on. So breakout level of 59.93. With targets of 62 and 65. So the advantage of, you know, getting into CSX down here is that, you know, you can put your stop at the low of the 55 EMA, 8 EMA, one of these, you know, indicators, or the low of this candle here. And, you know, if you don't get stopped out and it moves up, you just made a ton of profit with very low risk. If you get in up here, you know, your profit is less, but the trade has confirmed a little bit more. So it's excuse me, it's a little less risky to get into the trade after it's broken out, as opposed to down here where it could fail, you know, the breakout. It might not even go higher. It could just roll over from here. So I would be cautious about getting into these, but, you know, depending on your trade plan, it is something to look at. And I'm just here to provide some ideas and thoughts. So you have to do what's best for your trading strategy and your trading plan. Looking at Johnson & Johnson, similar idea to CSX. We closed above the 8 EMA. Based on the way I drew my fibs, we came back and tested the 38% retracement level. Actually, it broke a little bit and it touched the 55 EMA, but it is starting to move back up. I'm not sure I'd get in now until it actually closed above our breakout level of 148.21, but if it does do that, then we could get to 150.77 and 154.06. So again, it just depends on how you want to play it. Do you want to wait until we have confirmation on the MACD and breaking out, or do you want to, you know, be a little more risky and get in now with a higher reward, you know, but more risk of the stock rolling over? It's totally up to you and how you want to play it. UPS, once again, very similar to the last two stocks. It closed above the 8 EMA. It was on a little bit of a downtrend and kind of bounced here. I think UPS is a strong stock. It has a lot of headroom. If we do get above 135.53, I see targets of 140 and 147. So there's a whole lot of potential gain here if we do break out. So I would keep a close eye on UPS. I think it's a good opportunity. CarMax. This one I like because it's close to actually breaking out. Pretty straightforward. I drew my fibs from 116 to the low of 1.2, and I see breakout levels of 75.3 and 78.52. Again, I would wait for a close above 72.8. You know, the last like 10 minutes or so of the market. If we're comfortably above that that level, then I think you're good to go ahead and buy, or get into your position, buy some calls or buy some shares, and see if we continue on up. A couple more stocks here. I got 4 more. GPS, Gap. Kind of failed its breakout. You get a little better perspective there. It failed its breakout and pulled back a little bit to the 8 EMA. So what I would do on this trade is I would wait until we close back above this breakout level of 35.17, and if we do, then I think it's a good opportunity to get into the trade with targets of 37 and 41. NVDA. NVIDIA broke out on Friday. It's a very expensive stock, so its options are probably expensive as well. So I'm not sure if I would actually enter this trade, but it looks like a great trade. And as you can see, the way this stock has been trading over the last few days is pretty similar to what we saw on the SPY. We saw some sideways consolidation and then a big bullish candle on Friday. So I do think it has more room to run. Targets of 246 and 255. Next is STX. I like this trade a lot as well. Similar to what happened on NVIDIA. Broke out on Friday, and I think it has room to run to 57.52 and 61.93. This and NVIDIA would be 5-minute rule plays. See how the first candle reacts on Monday. If we get a close above the high of that candle on the 5-minute scale, then you're good to get into the trade. Just again, for emphasis, that doesn't mean that the trade can't go against you. It's not foolproof. It doesn't always work out, but it's definitely more of a a confirmation that the trade could go in your direction, as opposed to just willy-nilly getting in right at the open and not paying attention to price action. So that's how I would play NVIDIA and STX. And then lastly, everybody's favorite, Tesla. We kind of came down and had a little hammer candle here, which could be bullish. I'm not getting too excited yet until we actually see confirmation. But if we do break above 347.40, I think we might be good to continue on higher, retest target 1 of 360, and then ultimately get to 376. But again, I would not be getting in at this point. I personally don't like this candle as an indicating candle without follow-through confirmation. You see back here we kind of had a descending pattern here, a bearish pattern. We had a hammer candle which represented the bottom, and then we bounced and ran. So the same thing could happen here. I'm not ruling it out, but again, we'll have to see. What I'd like to see is MACD kind of turn back bullish, stay crossed over. RSI has plenty of room to run, as do the Stokes if they cross back over. So I do think Tesla has some opportunity to bounce, but let's wait and get confirmation on that before we jump in. Just want to step back to the SPY real quick. Nothing really to show in terms of the chart, but there are a lot of big names that are going to be reporting earnings, and that further gives me some confidence in the stock market moving up. Just off the top of my head, there's Lockheed Martin, Facebook, Apple, McDonald's, Alphabet. So with all these major corporations providing earnings, assuming that they have positive earnings, we could see the markets really run. Certainly the opposite could happen. Bad earnings could negatively impact the market, but given the way this January has performed, again, I do see some potential for us to continue on upwards throughout the end of January and through February. If you have any questions, please let me know in the comments section. I'd love to hear from you, any perspectives you have. Other than that, have a great weekend and good luck with your trades.